Joining us now with the details, White House Council of Economic Advisors, Stephen Miran. And okay, maybe now, but they're going up any time now, Stephen. One of these CPI or PPI prints is going to be frightening because of tariffs. No, we've been waiting and waiting, and you're telling me that prices have actually been declining.
Good morning. Thanks for having me. Yeah, so what we did was we looked through the details of the PCE inflation data and CPI too, and then at every good in those data, we looked at its subcomponents. And so what goods are, what parts are originating in the U.S., what parts are originating abroad. And so we're able to really get into a holistic measure of how much everything is imported. And what we found, and this paper's on our website now, you can find it on the CEA website, on the White House website. What we found is that since December, and you have to compare since December because tariffs began in January, since December, the prices of overall goods in the PCE data have gone up by about 0.4%. Meanwhile, the price of imported goods, and that again includes all the components and the finished goods, the price of imported goods has gone down by 0.1% in this time. So not only is there no evidence that tariffs are leading to significant price pressures for imported goods, but we're actually finding the opposite in the inflation data. And this helps explain why overall inflation has actually been extremely tame since the president took office.
And that's core as well. I mean, I can understand maybe from energy, but it's core as well, Stephen?
Yeah, so if you look at the paper that's on our website, what the numbers that I just gave you are for overall, but we've got numbers for core too, and a similar pattern emerges in core, where maybe instead of the overall price going down for imported goods, it's relatively flat, whereas the price for overall goods has gone up by more. But you still see the same wedge by which domestically produced goods have gotten expensive, have had more inflation, much more than domestically produced goods, which are exhibiting none whatsoever.
But this doesn't mean that it's not still to come. I mean, we can't completely dispel all the fears because many people have said, well, it just hasn't happened yet. When we get some of these cooler inflation numbers that we've seen that have been really great to see, obviously, but there's always that caveat that, okay, it just the effects of the tariffs is just not there yet.
Yeah, I'm sorry, let me just correct what I just said. The price of domestically produced goods has gone up by more than the price of imported goods. So it's still consistent with a pattern by which there's no inflation driven by tariffs. What you just said is won't it come eventually? And I mean, sure, eventually, a meteor is going to strike or whatever, but we've been waiting and it's been many months now, and that evidence has just not emerged. There's no sign of it in higher frequency pieces of data either. Like you see the various research put out by academics where they use scanner data. That just looks like noise and mean reversion. There's no sustained pattern of a tariff-driven price pressure anywhere. And the same thing happened in 2018, 2019, where critics claimed that there would be some sort of huge inflation, and we kept waiting and waiting and waiting, and it never happened.
But Stephen, we've had, the president has put off and delayed some of the implementation. Whenever we talk tariffs, we slap tariffs on, but we've delayed the slapping of the tariffs a couple of times. If they were all to go in and reciprocal tariffs were actually in force, and if we don't make any deals by whatever the next deadline is, would you still expect it not to be inflationary?
Well, I've always maintained that there could be volatility in the inflation data, just as there's been volatility in some financial markets or volatility in some other economic data. As you saw with the Q1 versus what it looks like how Q2 is shaping up much stronger from a GDP perspective. I've always maintained volatility was possible in the price data too. However, I do expect, based on the basic economics of what economists call tax incidence, whereby the party that's more inflexible ultimately bears the burden of a tax or a tariff, I've always expected in the long run that foreigners, that countries were tariffing, would bear the burden of the tariffs. Now, that was a long-run argument. What we're seeing so far is that even in the short run, there's been no pain for American consumers at all.